Arweave is on a massive run. It's permanent storage on the blockchain. It's up more than 100% in this month alone. Let's have a look at who's buying here. What's behind all of this? Let's look at the data most people are not looking at. So here's the rally, almost 50% today alone, 76% in this week, and 170% in this month. What's behind all of this? Now, I'm not going to bore you with the marketing jazz on the website, but you need to know the TLDR. Arweave allows you to store data permanently on the blockchain. It's not removable anymore. Now, this video focuses on the price development. We want to know where is demand and supply going. We need to know how much is supply expanding. We need to see what is driving the demand. How sustainable is that demand? Now, here is the very long-term price chart of Arweave. And at some point we were at $75, more than 3 times the current price. Now here is the long-term market cap chart. The maximum market cap was at 2.5 billion. Now we are at 1.5 billion. So it appears that the market cap has recovered more than the price. Why is that? It's because of an expanding supply, right? More tokens are now circulating, and because there's more circulating supply, a lower price can lead to the same kind of market caps. And so here is that supply expansion visualized on Messari.io. In September of 2020, we were at 44 million tokens. Now we are at 65 million, and the supply expanded by 30% last year, according to Messari.io. Is that a problem going forward? Will we still see a lot of supply expansion? The answer is no. Have a look at this. The circulating supply, 99.17% is already out. There's basically no more token inflation. Everything is floating. What used to be a problem for the Arweave price is no more. Now, if there's no more token unlocks, is the team still active? We can get a bit of a gauge for that in the GitHub repository. This is the place where programmers submit their code changes. And so this is highly transparent. We can look at this. There was an update here 2 days ago, another one 2 weeks ago, another one on the 16th of January. It's not like this is a dead project, but there was definitely more activity in the past. This looks like maintenance to me, not so much new product development. So then what causes this rally if it's not a new product? Is it maybe simply attention? Is it social metrics? Or is it maybe the usage of Arweave? Let's have a look at both. This is the number of Twitter followers over time, and this is growing, and this is rather uncommon. A lot of Twitter accounts for crypto projects are rather shrinking recently. Here is viewblock.io, and this shows us the number of transactions on Arweave. A very nice development. This starts in 2018, goes all the way to today, and this is very nice growth. Here we've got the data uploaded. This grew massively at the end of 2021, then came down a bit and is now turning around since middle of 2023. This is not necessarily growth anymore, but at least the negative momentum, the downwards trend was able to stop. Here is the transaction fees over time, sometimes spiky, sometimes relatively low, not necessarily concerning. Here's the number of active addresses. Somewhat fluctuating, somewhat staying at an elevated level, not necessarily a lot of growth though. Speaking of growth, we've got a separate chart just for the address growth, and yes, we do get our spikes of attention, but we are now at a relatively constant level. What are we learning from all of this? We are learning that the usage is not necessarily massively growing. We are learning that there is some kind of growth in social attention. We are learning that it's likely not a new product that will come out that's pushing this. So something else must be going on here. And I do not believe that this is market manipulation. And that's because of the following. Whenever there's market manipulation, we should see a multiple of the market cap being traded on a single day. The market cap of Arweave is 1.5 billion, but the trading volume on Binance was only 150 million, 1/10 of that in the last 24 hours. Yes, on the perpetual futures market, it's higher, it's 1/3 of the market cap, but still, this is not market manipulation kind of levels. Here is, I think, what's going on. Have a look at the chart behind me. This is Arweave relative to Ethereum. So we're not looking at the US dollar price, we are looking at Arweave measured in Ethereum, or the Arweave US dollar price divided by the Ethereum US dollar price. And with the initial token inflation, Arweave underperformed Ethereum by a lot. From top to bottom by roughly 88%, But then something happened in October of last year. The trend was able to turn around, and since then Arweave outperformed Ethereum by almost 200%. Where does this outperformance come from and why in October of last year? I think it's because of this chart. This is the stablecoin market cap over time. So we are looking at USDC, USDT, DAI and BUSD all combined, and we saw that market cap shrinking after Terra Luna collapsed, and we saw it then recovering since October of last year. Fiat money is flowing into crypto again. Altcoin speculation starts again. Crypto prices in aggregate are going up because fiat is getting deployed. So I believe Arweave is simply just riding the current wave of DePIN. It's mainly DePIN and crypto gaming and artificial intelligence that are doing the best in this bull run. And if there's no more token inflation and you've got an established product that's getting used and you're riding the current narrative in an overall expanding cryptocurrency market, then you get gains like this. So I believe this might not be the end. This rally looks very healthy to me. So let's see how this ages. Feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. The link is down below.